Both Facebook and Google had said that the work from home pandemic has no end in sight. What does this mean for the stock market, and are there companies that you should be investing in to help capitalize on this? Well, in this video, we'll talk about 3 stocks I think you should look at, and I'll also give you one additional stock that I think you'll like towards the end of the video, so stick around. Hey guys, welcome to my channel. If you're new here, I'm Romel, and on this channel we talk about all things related to finance, investing, and building wealth. We discuss mindsets, strategies, techniques, and resources to help you in your journey to build wealth. If you haven't yet, please subscribe. We produce new content every week. Alright, so 2 articles that I saw in the news are things that I think you guys should think about. The first one is regarding Google to keep employees home until summer 2021 amid coronavirus pandemic. It's not even the end of 2020 and Google's already looking a year out into the next summer. This is how much they think that their employees are going to be working from home until. That comment has some major ramifications. A couple things to think about is whether or not Google's real estate expansions are going to be put on hold. Is there a part of the real estate sector that gets affected by this? If their employees are going to be working from home until 2021, are there any properties that they're looking to expand into that are going to be put on hold because of this? And the second thing is what stocks get affected by not just Google, but all of the companies that are implementing this work from home strategy. The second article I saw was one on MarketWatch, labeled Zuckerberg says there's no end in sight to working from home. In this article, it says, add Facebook Inc.'s Chief Executive Mark Zuckerberg's voice to the chorus of tech executives who expect a long-term shift to work from home employees. During the company's earnings call on Thursday, July 30th, Zuckerberg said there are currently no end in sight for when our teams here will be able to return to our offices. It is incredibly disappointing because it seems like the US could have avoided this surge of cases if our government had handled this better. On Monday, Sundar Pichai, CEO of Google, parent Alphabet Inc., came to a similar conclusion. To give employees the ability to plan ahead, we are extending our global voluntary work from home option through June 30th, 2021 for roles that don't need to be in the office. So these are 2 big tech companies that are publicly issuing these statements. With the whole advent of working from home, there are a couple of early stocks that have gotten a lot of press because of their usability and because of their integration into this new type of work strategy. The first one was Zoom. That got a huge bump in price and in investing because a lot of people were switching to Zoom to do video conference calls. However, that's not one of the companies I want to talk about. The first company I want to talk about is Dropbox. Dropbox, ticker symbol DBX, is a file hosting service operated by the American company Dropbox Inc. that offers cloud storage, file synchronization, personal cloud, and client software. The reason I like this is because a lot of people are working from home and many companies actually use Dropbox as their central source of file storage. Personally, 2 companies I've worked for in the past actually use Dropbox as their file storage servers. Unlike some offices that have a hard connection to a server that's located in their office physically, Dropbox makes it very easy for you to access your files anywhere because everything is stored in the cloud. What's nice is that your computer can sync with the Dropbox server so that whatever new documents get uploaded there also get saved to your computer. What I also like is the team aspect of it. You can share files with people, you can give them certain permissions, you could either have them edit just a file, edit the folder, or you can just have them view the folders. What's also nice is how easy it is to share a link between employees or between people with Dropbox. All you have to do is upload a file and click on a button that says share link, and that's all you have to do. People will be able to download the link with no limit to file size. Dropbox is currently trading at $22.75, and although it doesn't have a dividend yield, it's a company that you want to look for when looking into growth companies. Again, when I invest in companies, I'm more of a long-term holder. I invest because I believe in the companies. I'm not looking to invest and make a quick buck by doing a sell, relatively quickly. Another article listed on NASDAQ.com says that Dropbox outpaces stock market gains. So this is a company that's been showing some good growth and good performance. The second company I want to talk about is Docusign. If you aren't familiar with it, Docusign allows organizations to manage electronic agreements. They offer e-signatures, which is a way to sign documents electronically. What's interesting also is that there's a way to add a notary section to this. So if you're a certified notary public, you can actually upload your credentials and sign it as a notary public. Docusign is also another app or company that I've used in one of my previous jobs. What I like is that there's a workflow that you can attach to each signature for a document. What that means is that, for example, you could have a 3-person workflow, which means that first I check it, I review it for its contents, I say it's approved, and I sign it. Then I can send it to either one of my upper management or to one of my third-party vendors to countersign it. And then you can send it to your accounting team to fully process and file the document. What I like about this company is that everything's done electronically. That means that there's no need to sign documents in person anymore. And with this whole COVID pandemic, limiting physical contact and limiting the need for physical signatures is one of the things that a lot of companies are shifting away from. Docusign, ticker symbol DOCU, is currently trading at $216. One thing to note is that if you take a look at this stock's performance, it's been on a steady incline. And another thing is that even during the pandemic, it didn't get affected that much. There's not as much of a drop and a V-shaped recovery as some of the other tech stocks. The last stock I'd like to talk about is Twilio, ticker symbol TWLO. If we go on Twilio's website, it says, what is Twilio? Twilio, simply put, is a developer platform for communications. Software teams use Twilio APIs to add capabilities like voice, video, and messaging to their applications. This enables businesses to provide the right communications experience for their customers. Behind Twilio's APIs is a super network, a software layer that connects and optimizes network communications around the world. This is what allows your users to reliably call and message anyone anywhere. With Twilio, you can reach customers in ways that they prefer and engage with them effectively using context related to that interaction. As customer experience can increasingly make or break your brand, programmable communications has become more crucial than ever to the success of business today. So I know that was a lot. It seems super confusing, but if you don't know what it is, take a look into it a little bit deeper. I think some of the companies that they're currently partnered with or that are currently using their platform are ones that you would know. If we go on some of the customer stories, you can see some of these apps that were built with Twilio, such as Lyft, American Red Cross, Airbnb, Coca-Cola Enterprises, Trulia, Hulu, Dell, Box, VMware, Yelp, Salesforce, Twitter, Zendesk, Twitch, Uber, Porch, TaskRabbit, Handy, and there's a whole bunch of partners that use this platform. So take a look into that a little deeper. This is also one of the stocks that didn't see that much of a decline during this whole pandemic. Alright guys, those are my 3 recommendations for stocks, and like I mentioned at the beginning of the video, I'd like to add one bonus stock. And I say bonus stock because it's not really a stock. If you followed some of my other videos, one of the biggest things that I like to preach is about diversification of your portfolio, and the best way to do that is using ETFs. The ETF I'd like to introduce you to is called the Direction Work From Home ETF, ticker symbol WFH. I mean, come on, how fitting is that? The current share price is $53.79. If we take a look at its top 10 holdings, you'll see that the top holding is Twilio at 4.17%. And in terms of the sector weightings, you see it has investments in many sectors, such as software, IT services, communications equipment, interactive media and services, diversified telecommunication, internet and direct marketing retail, semiconductors, technology, and hardware storage. So you can see that it does have a lot of companies relating to the work from home situation that we're in. All right, guys, that's what I have for this video. Let me know what you guys think about those 3 stocks and 1 ETF. Are those companies that you've seen before or have invested in? And if not, what are some of the stocks that you recommend looking into regarding this whole work from home pandemic. I know everyone's been going through some tough times during this pandemic, so I really just wish you the best to you, your family, and all your loved ones. Again, thank you so much for watching. If you'd like to connect with me on other social media platforms such as Facebook, Instagram, or Twitter, I'll leave links to my profiles in the description down below. Also, if you don't mind, please smash the like button to let the YouTube algorithm know that you enjoy the quality of content we produce. Again, please subscribe. We're a new and growing channel, and anything you can do to support us is greatly appreciated. Alright guys, that's what I have for this video. Thanks for watching, and I'll see you on the next one.